Everybody, welcome to our Tuesday webinar. It is Tuesday, I think. The days go by so fast these days, I kind of lose track of it. But it is Tuesday, October 18th, and it's just after 9 o'clock here on the west coast of the good old US of A. Dr. K, are you there live in London?
Live at 5 p.m.
Live
over
at
here.
5, gotta love it. Anyways, hi everybody. People still logging on, I see. Kind of an interesting market, and you can see that there's money to be made, but I think it's mostly in terms of looking at the market on a stock-by-stock basis. I'm going to go over some of the, if I get my charts organized here. Everybody see my screen okay? All right, hello from PA. My nephew just moved out to PA. He's in Monessen, PA. Southern California boy raised on the beach. And for some bizarre reason, he loves Pennsylvania. Go figure. Anyways, I'm sure it has its nice points. A lot cheaper to live there than LA, for example. Anyways, let's look at what's going on in the market here. We have on the, let's see if I can get this up here. Nope. There it is. Here's your NASDAQ index. Now, you see what's going on here? You've come up into this, let's get rid of these lines here. I was drawing those a while ago, to recall, but you can see what's going on. You've come up to the highs, and so you're backing down today, and you pull in. Now you're forming this little handle. So what it looks like to me is I don't think you can assume that the market's going lower from here. In fact, what I felt this morning, I was short, Green Mountain, Fossil, been hitting the Chinese internet's been hitting other stocks, even tried to short VMware. Off the 93, 94 level this morning, and it started to blow to the downside, and then it caught a bid down there around 89 and has moved back to the upside. So when that starts to happen, you're making money on your shorts. You don't want to be a pig. You can feel the market pushing against you, and you don't want to fight it. If you have a hard down opening and the volume looks like it's going to be brutal in the morning, or it's up in the morning, and it looks like things are going to get nasty, and then the whole thing kind of reverses. In this environment, particularly I think with QE out there, and you don't know where it's going to come from or what form it's going to come in, you have to be a little bit nimble, or at least willing to take your profits when you have them on the short side, especially this morning. Once that thing starts to turn, I pretty much tell myself, after a big day on the short side yesterday, if I start to see my profits dwindle on the day, I'm just going to turn around and go cover and even in some cases go long. And so I think right now the market's in a questionable spot. Dr. K, do you have any color to add in terms of where the model is with respect to the market? Are you closer to a buy signal or a sell signal?
Well, yesterday's action pushed the model closer to a sell signal. We had a distribution day on the NASDAQ. However, all things considered, it wasn't strong enough to push the model into a sell signal. Today's action looks pretty ambivalent. So the model is just sitting and waiting, watching the action of leading stocks and these indices to get more color in terms of where its next change of signal will be.
So we're kind of still in the waiting game here. And when you look at it logically, Dr. K, you might say that we are in a position where we could consolidate and even continue to move higher if that's the case, right?
If we have enough quantitative easing, if it's powerful enough, then what I expect to see is a consolidation here, followed by a legitimate follow-through day. And we would probably, I would like to see, the model would like to see pocket pivots being issued by some of the leading stocks out there for further confirmation.
But wait a minute, Dr. K, wasn't there a follow-through on the New York Composite Index last Wednesday?
Right, but I don't track, the model does not weigh that index heavily enough unless it's accompanied by the major indices such as the NASDAQ Composite or the S&P 500. And all the majors actually were barely up 1% when that NYS index was up something like 1.5%. So
right.
It certainly was not enough validation to say that that was a legitimate follow-through day.
Yeah, I would say so too. And I think if you're trying to get long and buy things into that follow-through, I don't think you're making too much progress. Apple has been one of the few standouts. Let me get to my
Yeah,
daily
there's
charts.
a smattering of leading stocks such as Apple that are acting uh, relatively well, but they're so far and few between, and so many of the leading stocks are still struggling around their 50-day moving averages or 200-day. So it's tenuous.
Yeah. And this is very tough to buy. So I guess you could buy it, and who knows, maybe it does work. I don't know if there are many precedents for that sort of situation, but I think if the market does improve and you start to see the situation evolve on the long side, there's still plenty of time. Think back to late August, early September of last year, when you had the follow-through day on September 1st, and there was still plenty of time within the ensuing weeks to get long any number of stocks, and there were plenty of things to play once things got rolling along. So, sometimes you don't really have to be aggressive one way or the other, but, I'll take what the market's going to give me. And, our latest triumph on the short side has been Green Mountain. And you'll notice that when we talked about, we never mentioned anything about this one website that said some large institutional investor had come in and bought 35,000 calls, 100 calls, and balanced them off with likewise a similar sale of puts. So they sell the puts, the 80 puts. You notice also Green Mountain's holding the 80 level. But they sell the 80 puts, buy 100 calls, and that's a bullish spread. Everybody knows that, or anybody who plays options. But I thought it was interesting that someone thought that was significant. But it's one institution buying those. And I can tell you one thing, having worked with institutions when I was at O'Neill, and when I was there, we had a record of over 600 institutional clients, mutual funds, hedge funds, trusts, pensions, you name it. And the one thing that I would always joke about, having come from the retail side, as a retail broker, any retail brokers out there? I pity you. But in any case, it's a good place to be from. But having come from the retail side, you run into individual investors, and they're oftentimes pretty dumb, for lack of a better word. And so I used to joke that institutional investors were just like retail investors, but with a lot more zeros behind the account values that they ran. So I think the fact that they just come in here and one institution comes in, buys a bunch of calls or puts a bullish spread on, that's not a reason to do anything with the stock. And you'll even notice yesterday we didn't mention anything about David Einhorn, who was somewhat of the catalyst yesterday for taking the stock down. But because as I look at this, the stock's only doing what it already wanted to do. So David Einhorn's comments simply gave the stock the excuse it needed to do what it wanted to do in the first place. So here you're coming down into the neckline. Depending on how you draw it on a weekly or daily, you could be close to the neckline somewhere in here, and you've undercut this 82.40 low. So it's logical that you could get a rally back up towards, the mid to high 80s, somewhere in here, maybe even further if the general market rallies. But if the general market turns, you're not likely to see Green Mountain go lower. So on the basis of this undercut, I'm inclined to just cover my position and go away and be very happy for a nice 10-15% move over the last couple of days and take the profit. So as we know, bulls make money, bears make money, pigs get slaughtered, especially on the short side. So when is it okay to short through the neckline? What I would be watching for now is, let's look at Netflix. What I found usually is that if you have a very weak pattern and you're setting up as Netflix was, and you can see here when you have the neckline, you remember necklines are kind of approximate. It's not always a exact science when you draw necklines, but when you basically break out to the downside on a massive volume gap down, usually you can treat that like a massive volume gap up. Once you establish a high for there, you can come in and short the stock because it's a breakout to the downside. It's almost the same thing as a gap to the upside, but it's coming out of a proper pattern. So the same way that we would look for a viable gap up to be coming out of a constructive base or some sort of constructive technical action, you're looking for the same thing. You're looking for deteriorating technical action in something that's breaking down to the outside, to the downside rather. And I think the fact that Netflix is a former big leader also helped that along. So in that sense, Green Mountain, having been a former leader, this thing is now in position. Now, if you look at Netflix, when it came down, it formed a couple of right shoulders, so it may make sense. The only difference here is that it was coming down through its 200-day. This one's a little bit different because you haven't gotten to the 200-day here, but it would be logical that maybe you have a couple little bounces in here. So if you got short up here, You could hold this thing if you want to, if you're playing a smaller position. If you're a maniac like me and you're running, 200% position short in Green Mountain, then maybe you want to think about taking some profits here or cutting the position down. But you could try and sit with it. The only thing is if the market keeps rallying and it doesn't really continue to deteriorate, then you run the risk of messing up what is a pretty good trade. And on the basic idea that we like to cover and take profits when you undercut a logical low, and you got to see you have these two lows in here in this big ugly pattern, whatever you want to call it, and you're on top of this area. So it's logical for it to bounce. So I'll take the profit, sit back, and see what happens. If some of you want to play it out further on the premise that it's going to continue lower, then you can do it. But I tend to key things with the market. If the market isn't cooperating, so today I want to be short only if I'm seeing the market roll. It was doing that earlier. Boom. I'm not going to stand in the way of the freight train. Fossils started to break down. Volume picking up. You notice it's getting support up the 10-day line, the pink line here. You also undercut the low 4 days ago. So that looks logical. Fossil tends to be stubborn around a moving average, so I could see it maybe trying to push into 94, 95 again. And if the market rolls over, maybe it becomes a target again. I covered on this undercut. If it was going to continue lower and the market weakens again, then I'm using this as my low. But that's how I'm playing it. So I'll play big positions with the idea of covering quickly if they don't work out. I can make big profits. Yesterday was like over a 10% day for me. I think it was like a 12% up day yesterday, and then today was starting to look like we're going to be at 4, 5, 6%, and everything starts to come in and just back away. And that's kind of the way I gauge it because I'm running things so heavy. Now, if you're short fossil in here and you want to give it some time, you can. So it depends on how you want to handle the trade. Baidu, the Chinese internet's all got smacked. But we talked about shorting it up on this move up into the 50-day, and then you get this gap up move, which I thought was pretty interesting in that it didn't occur on very much volume. It filled the top of this gap here, so it comes to the top of the gap here and rallies right up into the top of that, and then rolls over. You got volume picking up, and right now we're probably running at a pretty good clip, probably enough to do above average. You're getting some support here. You undercut this low, so you could sputter around in here and then head lower. That's a possibility, but we just kind of watch this because it's really going to depend on what the general market's doing. Now, if you shorted up around 134, 35, some I know you were emailing me, you were shorting around 137, so you're looking at 10% profit. Yeah, that's takeable. You could take that, take half of it. I don't know if you want to do that. It really depends on what the general market's doing. So I think that's really the key, and you're going to be better off shorting into into a declining market or a market that's weak. And right now, as Dr. K said, there's really what was the word you used to describe the market's action, Dr. K?
Ambivalent.
Ambivalent, yes. But if you're nimble and you're watching some of these ideas we've been talking about on the short side over the last 4 or 5 days, you've been able to make some money, I hope, over the last couple of days. I know I have, so I'll take it, And if the market's not going to break down, and obviously it's going to take more time for these short sale setups to work. So, seen a similar situation, broke down. You see the big run-up on the news that some Chinese government officials said they like their Weibo platform for social networking. Woohoo. Hey, Bill, I can hear your laptop mic might be on, just so you know. Unless that was you, Dr. K. In any case, so now you see Cena like pulling back on top of this little area of congestion. It's logical for it to bounce. So again, it's going to depend on what the market does, and I think you just kind of got to watch that and see what happens. So here we're watching VMware. This is kind of interesting. It's kind of pocket pivot action here potentially. What would you say, Dr. K, if this thing holds like this? Would you call this pocket pivot?
It's a low quality pocket pivot simply because the basing pattern is pretty inferior, and the industry group as a whole is still very weak. So how I would handle VMware is to wait for the next pocket pivot. In other words, if it's a legitimate constructive pattern, what will happen is it'll go a little higher, it'll consolidate, and it'll issue another pocket pivot. That would be a safer one to buy, even though you have to pay a higher price.
Oh, well, now you tell me. I tried shorting this morning. Actually, I shorted the rally on earnings. It started to roll over. I shorted it, and it headed down hit a low of 88.85, looked like it was going to go down the toilet at that point. And then the thing turns around, so I turn around, cover my short, and go long the stock. So I'm actually sitting long VMware, and we'll see if this works. But I think it could potentially move higher. So I'll play that trade. But one thing that I picked up from being short it this morning is the way that thing turned. It was starting to come in, the way that bid came in and started to turn. That gave me some confidence and understanding that maybe they're going to take this thing up. So I definitely didn't want to be shorted at that point. I decided to go long. So we'll see what happens. Still, verdict's still out on the trade. We'll see what happens by the end of the day. But I'll do that. If I'm short something and I feel this push against me, I will go ahead and turn and go long, and maybe just for a trade, a few bucks. But I do take advantage of it. One of my best trades was back in December of 2005 in Celgene, and it is a trade I like to talk about a lot, actually. Because it's an example, Jesse Livermore, the way he used to trade, used the market as a feedback system. When I go on Fox, they're always trying to pin you down, make predictions, and then they want to say whether you were right or wrong. My feeling is, how much money did you make when you were right, and how much money did you give back when the market finally told you were wrong? So it's never a matter of being right or wrong, it's a matter of being on the right side of the market or the wrong side of the market and then making the adjustment. And Jesse Livermore used to use the market as a feedback system. So if he's trying to short something and it's not going down, he'd turn around and go long the thing. And a lot of times he made some big money that way. But I recall
Bernard Baruch used to say that the least important measure of success as an investor is how many times you're right versus how many times you're wrong. It's pretty irrelevant. It's how you play the trade when you're right, how you position size, and how you manage your risk. Those are the most important rules. Every investor hardwired down in their portfolio.
Exactly, and a lot of people place so much stock in having to be right or not even allowing themselves to be wrong. And I think a lot of you have been around for a while. You've heard me say that I keep a little sign on my desk at my office that says I must lose to win. And so when I'm wrong, I just admit I'm wrong, get out of the way. In the past, when I've been stubborn about it, it has cost me a lot of money. Here's actually the trade. Let's see if I got this right. Is this actually, you know what? It was the end of 2005, right in here. And I was watching Celgene, and in here the market was getting weak, and I started shorting it. And I think it was on one of these days, probably somewhere in here. When I was shorted here, the next day it gapped up. Big volume on the gap up, and even though the stock churned around, you can see here the big volume. That told me that somebody was in there buying this thing, so I just turned around and went long a huge position, and it was up 35% pretty quickly.
That's a beautiful example of a viable gap up, massive volume, and the stock.
Yeah.
Prior to that gap up, the stock has had a relatively constructive tight base. I got support at the 50-day, so that is a beautiful example of a wonderful buy point, and then it just sails on higher.
Right, and you see how what the market's telling you from one day to the next changes, and you have to flow with that. If you don't, you're going to get clobbered, and that's not the best way to make money. So all that is to say is I'm trying this out. You guys can see where it closes and see if I end up making money on the trade. But I think if it holds the 94 level, it's probably okay. Now, here's one. Dr. K and I have been debating this one just a little bit. I mean, you have some pocket pivot type action on LinkedIn here. And so this one comes up and it tests the 65-day exponential. So I actually decided to go long the stock. I got a small position in it right now and just testing this. If this rally continues, maybe it comes out here. These guys announced earnings on November 3rd. But I think this action is interesting. There are a couple of caveats about this. The first one being that it is a low relative strength stock, but we also have to remember that it's only been public for about 22 weeks, 21, 22 weeks. Not very tight in here. But it could, be setting up, and it could over time set up and go higher. So I'm going to take a shot on this here, and so far it's starting to work, and we'll see what happens over the next couple hours next few hours as we go into the close. So that's really where we are with the market. We don't see much to buy, so we're kind of ambivalent about it. We're waiting for the next signal in the market, but that's that's not an issue. We take our time. We wait for the window to open wide. We don't like really this idea of you're not sure, you think you have a follow-through day on the NYSE Composite Index. and you play light or play cost, forget that. Give me a window that's wide open and then let me go through it one way or another. That's what I want to do. That's what I'm looking for. Otherwise, spend your time doing something else.
I think
Let's go
we,
through.
I think we all as investors, and when I say we, I mean myself and Gil and virtually most investors I know, whether they're very experienced or not, have a tendency to want to be part of the market action, especially if the market's going higher in a trend or going lower in a trend. If they're not part of it, they feel like they're missing out. And here's the thing, I mean, sometimes a trend will, you might miss the first 2 or 3 weeks of a trend. It could happen, but that's okay because there's a lot of uncertainty in the markets that exist. If that window's not open, you want to, as a more conservative investor, you want to keep your powder dry and wait for that window to clearly open. And just as a back-tested study on my own portfolio, if I had traded the market, say between the year 2005 and 2008, so those 4 years, if I just traded the market about 1/4 of what I did, I would have had even better returns. So that was kind of a startling example. In other words, 2005 had a 3-month window of opportunity. 2006 had about a 3.5-month window. 2000, and this is not in hindsight. This is actually when that window opened. It was very clear to me that window opened, and I was not surprised that the bulk of my profits for each of those years came during those 3 or 3.5 months. So I think a key to investing is being able to understand and identify that this window is now opening and it's time to play hard. When the window is not open or only open part way, then you don't have to play. And you can save money and time.
Yeah. And both Dr. K and I will admit that there are many times we've played when we shouldn't have. And as we get older and better at this, hopefully, that's what we're really focused on. And we've actually done pretty well running money this year. We're up pretty good. And we've only been invested, what, maybe 1/3 of the time, Dr. K, the whole way?
Yeah, something like that.
Yeah. So, and we've started to realize, hey, you don't really need to play this all the time. So my golf game's getting a little better. I've had some more time to practice. And hopefully we get much better at that. Oh, somebody tells us they're reading Reminiscences of a Stock Operator. I would say anybody who is a VOSI subscriber or member needs to read that book. That is like the definitive book. I'm trying to get Stuart Varney to read it, but he wants to stick with his dumb buy and hold cheap stock methodology, which doesn't seem to make him much money. But frankly, I think anybody who is savvy in the markets has to have read that book. Otherwise, you're just another fool. And yeah, it is hard to get there. Even Livermore struggled with when to be in, when to be out. He says in that there's one quote where he felt he always had to have a line in the market. He always had to have an interest in the market, and that was the hardest thing to ward off, is that feeling. Well, there's no real questions really to answer about the TZA and TNA and all the ETFs until we get a signal in the market direction model. Is a gap up in Apple on earnings tomorrow playable or too much of a V-shaped base? Dr. K, what would you say?
I'd say there's more risk in playing a gap up based on earnings, but of course it's contextual. So if we got a very powerful gap up on huge volume because of a dramatically surprising earnings report, then that could be a legitimate, viable gap up. We're going to have to wait and see what transpires tomorrow.
Yeah. And who knows? Right now, everybody seems to think that the stock it's a given that it's going to go higher. And I would say if you're just evaluating on a fundamental basis, I mean, Apple is just they're just blowing everybody away. I finally had a chance to actually see an iPhone in action. I bought my daughter one. I'm still using a BlackBerry. And when I buy an iPhone, though, I'll let you all know because that will be the top in Apple. So I bought my first pair of Crocs. My first pair of Crocs I bought in October of 2007, and that pretty much says it all. Somebody's asking about Crocs, interestingly. What would you do with that? I wouldn't do anything with it. I'm glad I didn't own it, but again, it shows you why you don't want to buy laggard stocks. Let's see. Somebody asking right now. I was looking at this one the other night. It was coming through my screens, but it's kind of a thin stock. I don't really care for it. Dr. K, you have any comments on this thing? Here's the weekly chart. Doesn't that look pretty? I don't know. It looks pretty erratic. Wide weekly ranges, no real tightness in the pattern.
Yeah,
good work.
I would say it's more failure prone. I mean, it could work, but I don't think it's going to really sustain a good
Yeah.
move to the
Reminds me
upside.
of this. Reminds me of this thing, this Arcos Dorados, the Mexican McDonald's. You said you were trying LNKD long here. Yeah, I'm testing the position out here. And here, as I said, what you have is these pocket pivots through the 50-day. These are bottom fishing pocket pivots, but there's a couple things to keep in mind. I think Dr. K pointed them out. It's a low relative strength stock, but it is, and see, I think you can argue this one if you want to. And Dr. K, when you get back to LA, we'll go through a couple of bottles of wine and talk about this one. But it has a low relative strength, but it is in an area that I think is going to be paramount as a potential area of leadership in the next bull run. And I think by that time, maybe next year, you'll see Facebook come public, maybe some other companies come public. And so I think there's a thematic thing going on here that might overweight or overrule or outweigh. Let me get my words right here. I'm speaking like Barack Obama without a teleprompter, but I think that this group will lead, and so kind of looking at that way. So I think that outweighs the low relative strength, and you get the move up. And when I saw this, I thought 3 days up, and they're all pocket pivot volume signatures. This is not a pocket pivot because you're too extended. These two could be considered pocket pivots up through the 50-day. And then you pull back into the 65-day exponential, and you get a little bit of support. Not a lot of selling. And the other thing to notice about LinkedIn here is that notice as you're coming along these lows, you notice how the volume selling in here is really very light. That red line there is a 50-day moving average of volume. And so you're not really getting a lot of selling. Now here's the thing to note, okay? Let me compare this now. Let's look at the NASDAQ chart. At the same time, let's see if I can actually get these to line up. But, I mean, let's just look at, let me bring this in. Whoops, wrong one. All right, now we're talking here. Let's line this turkey up. Okay, now notice as the NASDAQ was coming down and making this low, you're getting hit with some volume, and volume is picking up on the sell side, and you undercut the lows. At the same time, LinkedIn held this prior low, whereas the NASDAQ was undercutting. So on a relative basis, it was acting better, and you were not seeing any heavy selling coming into the stock. Notice even on the retest here, you're drying up with the selling. So it seems to me that what you're slowly doing here is bringing out the weak hands and starting to bring in the stronger hands. Now, I think this is a situation that is evolving, and so it's still in flux, but I think you are starting to see the slight rumblings of positive characteristics within the base starting to build up. And Dr. K would say over time you want to see, like he's saying, buy the next pocket pivot, and that may be the best time to buy it. But I'm trying to get a feel for this market here and what it's going to do. And when I look around, I don't see a heck of a lot of things to buy. I got to use my little bag of tricks, and this is one of them. VMware doing that. That's another little bag of tricks based on just the inverse of what I'm picking up on the short side. So, and right now you're seeing the volume kick in. Volume is higher than it was yesterday, and the thing is moving higher. So it may break out of here and move much higher. Now, this may not lead to a big move. It may have to base, but just kind of getting a feel for it. I like to get my feet wet. So
a good way to sum up these patterns is if you're an aggressive investor and you see this kind of pocket pivot on a low relative strength stock, take a small position. But if you're a conservative investor, wait for the perfect pitch.
Right. And if you're a maniac, just go all in, like me. Anyways. All right, more questions. What's the name of that book? Reminiscences of a Stock Operator by Edwin Lefebvre. What should I look for when the window opens wide? Well, look for us to send some email alerts out to you. That's all you need to do. Do you see any handle or triangle forming in FIO? This FIOS. This is the guys who are putting storage on
FIO.
Using flash memory and FIO. Sorry about that. Yeah, it's starting to set up. So this is starting to look more constructive. Coming off the bottom and starting to build a low here. You're getting some upside volume. Notice how the volume here is drying up on the sell side. Stock's getting a little tight in here. Let's look at a weekly chart. I've been watching it. Now, the weekly chart, you're premature here, so you can see that pretty clearly, I think. It's going to need some time, but maybe you set up in some kind of little 5 or 6 week pattern in here. or I don't know, the way this market's been going, maybe just V's right out of here, right? Wouldn't surprise me. But I don't see a handle yet. I mean, this could be considered a handle. It's wedging along the lows, but you want to judge a, whoops, where do we go? Where's your weekly chart? There it is. You don't have a handle here, so you'd need to have a down week before you even start, looking at a handle. So maybe it comes a little higher and makes another, makes a handle up in here. It's a possibility. You can see some of these V-shaped couplet handles work. I remember IGT, I think, had one back in 91 or 92. You remember that one, Dr. K?
Oh, yeah.
It's kind of V-ish. So they can work. That was
That
Gilmore.
was a great model book stock, IGT.
Yeah, people ask about that question a lot. How does Gilmore report differ from VOSI? I don't know. It doesn't seem kind of obvious. In one case, you have VOSI is run by Dr. K and I, and it's real-time commentary, whereas Gilmore report is twice weekly, 10-page report I write, just kind of giving general thoughts. So if you just like general thoughts on a twice a week without a lot of noise, and maybe that's what you like. But personally, I think you just get both of them. Then you're covered. But a lot of the stuff that is covered in Gilmo is dealt with in real time on VOSI, but I might go into more discussion on Gilmo. So, and then that is also produced by another company, Gilmore Ellison Company LLC, which is run by Kevin Martyr and myself. Kevin Martyr does his Martyr on the Market piece. So some people actually like his stuff, and combining the two on one website, there does seem to be a market for it. But from an O'Neill perspective, VOSI is just much more powerful by definition, simply because you have Dr. K and I teamed up. And the two of us alone is one thing, but when we team up, it's a heck of a lot more powerful. And I think we've started to see that come out of the equation this year with the way we've been running money and doing pretty well. And I think making a few good calls along the way. Just a couple, right, Dr. K? Let's see. Somebody asked, should we fade Jim Cramer, on the long call on GMCR? I don't know. I think this thing is holding the 50-day. It's not really breaking down. So I'm not necessarily going to short it or buy it here. We're focusing on the short side. We basically focused, the ideas we gave you last week were Fossil, Baidu, Green Mountain, and those have all come down pretty nicely for profitable trades. Whether they pan out on something more than that's going to depend on the market. But last week I was short Priceline, Fossil, Baidu, and as of Monday 10 a.m. was stopped out of all three just before the market turned down. Well, that may happen, and then you come back and reshort them. But is it too late to reshort? Let me tell you something. If you can't figure that out, please don't short stocks. I mean, where's the right place to short Priceline? Up at the 50-day, like we were saying last week, or the 200-day? Down here, you're running the risk of this thing punching back up into the 500 level or higher. And you don't really need that. You can also see the Dow's up 61, NASDAQ pushing up 0.5%. Everything's pretty much, S&P's up the most. So, watch out. If we get a follow-through day, you got a buy signal in the market direction model. If you see that, I think I would just cover my shorts. But I don't think I'd be trying to get short here. We'll tell you if we think that's the case. We set some price objectives for the stocks that we already told you to short last week. In Green Mountains, the initial price objective was hit, but the secondary price objective down at 74 near the 200-day can come into play. Same thing here. This could go lower. I mean, if you're short from up here, you don't necessarily have to cover, but you might think about taking some profits just on a little chipper trade here, chip shot trade, as I call it. And then see where this market goes. But right now, just for the record, I'm long. I'm not short this market. I got starter positions in well, not even starter positions for me. VMware and LinkedIn. I'm just waiting, seeing how this goes. I could be blowing out of them in the next 10 minutes. But right now, they're starting. Now VMware is starting to work a little bit, pushing 95 now. It looks like it just wants to go higher. So I use 94 as a stop on that trade. With the idea that it should hold at the top of this range, and that's a pretty nice, for the way I like to trade, that's a pretty nice risk reward if this works. So, but that's not NYC volume. Okay, let's get these index charts out of the way, off to the right here. Down, boy, down. There we go. This guy, you go over there. All right, here we go. Let's look at some other questions. If you don't know anything about shorting, read the book, How to Make Money Selling Stocks Short, that I wrote with Bill O'Neill. I don't make a dime off of that, so I'm not pitching it to make any money. And even if I was pitching the book that I did write with Dr. K, I mean, it's not like you make a fortune publishing a book. It's a lot of fun though. How about Hans, Dr. K? Hans actually looks okay here. You know that?
You know, that's consistently been a stock that resists the weakness in the market. It's the first to get back up on its feet, hit new highs. I think this is one of the most powerful patterns in the market. So if you want to go long, if you have to go long, even though the market direction model's in cash right now, this is probably one of your better bets. But again, I would wait for a pocket pivot. This will most likely have a pocket pivot at some point if the MDM goes into a buy signal situation.
Yeah, you know what I think here is you're moving out, you pull back, you undercut here, you shake everybody out, you're moving up, now you're pulling back constructively on top of this. If you're an aggressive type, you could try and come in with a position here. And I'm actually going to buy a little bit right here, right now, 93.50 offered. So see if this works. So by the end of the day, I'll let you all know what happened. You guys, IBD has a short selling course. It's in the paper. You go on investors.com and look for it. I don't know what the link is. I don't really have time to look for it right now. But I think you should check it out. I haven't looked at it, but I'm sure it's pretty good. If you've got Bill O'Neill sitting there spending an hour annotating historical examples of great short sale models, then I think it's got to be good. Bottom line, you know. And I just say that as somebody who had the privilege of sitting with the guy, you know, all day long, trading and listening to him comment on this and that, and if you just get the chance to get him to talk about something historically or look at the stocks or anything in the market for an hour, I think it's got to be worth whatever they're charging for it. But Dr. K says a consolidation in FTD could turn MDM to buy. I thought FTD had to be 4 to 10 days off a low. No, they don't. Follow-through days, I've seen follow-through days as late as the 13th day. I always remember the 13th day follow-through in August, and that actually occurred back when I was a broker at Payne Weber, and I remember this because Elaine Garza rally. Anybody out there remember Elaine Garza rally? Yeah, so I mean, she made her name by calling the market crash in 1987, and then she got a big sell signal on her model in August of 1996, and the market turned around and had a follow-through day. And I do remember getting up in front of the entire office of brokers. There were like 60-something brokers in that office, and you know, showing people a chart of the follow-through day, and that, you know, you're now in a bull trend, and nobody believed me. So, but you know, if you get a group of brokers thinking one way, fade them. And if you ever run across a broker who tells you that he has 30 years experience as a broker, run the other way. Because bottom line is, if you really are any good, you don't remain a broker. Let's see. But if you're really stuck, then you start a website, right? Let's see. Red Hat. Somebody asked about Red Hat. I mean, that looks okay. I think it's an interesting cloud-type name, so I don't really see anything here that's viable just yet. It looks like it's trying to form a handle, but not bad. Can you talk about your daily routine? You know, I don't know what people mean by routine. It's, you know, we run our screens and all, but there's no real, I wouldn't say I have like this religious routine. You know, get up in the morning, have breakfast, look through all the news. I actually get things distilled and sent to me via a Bloomberg email, and then another thing from JP Morgan. That's a synopsis of all. Then I just look at that. But usually most of my work is done the day before, where I'm looking at my trigger points and where I'm going to take action on stocks and setting alerts, stuff like that. Dr. K, do you have a routine that you follow?
No, it's pretty amorphous. You know, it depends on the situation of the day. I remain very flexible in terms of my time management. Sometimes I get a great idea that I want to study an idea, and I will literally put everything down and then spend the next however long, you know, a few hours focused on that idea. If it's a very exciting idea, you know, stock market research related. I'm naturally running my screens. I'm managing the portfolios. Oftentimes I get ideas on you know, what we're going to put into our our third book, so I'll start writing there, and so that's building up nicely. But it's very organic. I mean,
Yeah.
wherever my mind is taking me is where I go.
Yeah, but there's no specific routine we have that, translates into determining what's going on in the market, So it's just
I
kind of
mean,
going
there's
through and seeing what's going on.
consistency would be there's certain rituals I do to make sure that I'm 100% optimized, such as like kind of like Bill O'Neill would religiously go to the gym. I think what around 6:30 in the morning Pacific time, 3 hours.
You could go on at any time, actually, because I
Or
remember
rather, sorry, not
at
Pacific
9.
time. You would
Yeah,
go like 5 in the morning. It's something very early,
yeah,
And I like to do that. I like to, to drink my green tea and make sure that I'm physically optimized.
yeah. I mean, I like to have my mimosas in the morning before they open. That kind of loosens me up. Then I go for my run and have a cigarette. How's that?
There you go.
Okay, let's see. Steve, you were late. Oh, so what do you think, Steve? You think you're special? We got to cover price time for you because you just got here? Well, I guess we will. But as I was saying to everybody else a little earlier, Steve, before you showed up, you're kind of hanging on. We said short this thing up in here, and the moving average is just kind of hovering below it. So, the thing is the market heading higher or what? And the market's heading higher, So you look like you just pulled out, making a little handle. I got to tell you, people, I think we're going higher. So that's what it feels like to me, and I get that information from seeing some profits evaporate this morning on the short side. But we still did well and made some money. So we'll check the long side here. People asking about racks. Racks, is it setting up? I don't know. Is it setting up? It's come up off the lows and it's bouncing around. So, but there's no viable signal here, so I can't tell you if it's setting up. Gap up on EMC, who owns VMware. The two act pretty much the same, and see, this probably confirms it. That's a nice move there. So I think you're going to see it go higher. I think VMware's starting to work now. We're pushing over 95. So let's see. I don't think EMC would sell VMware. I think they would be dumb to. Yeah, there are fewer long ideas compared to the spring, summer of, well, I'm going to say compared to last year at this time. Not really this time, but, at the beginning of September, at the end of August, when we had the correction last year, there were a lot of stocks setting up with pocket pivots and whatnot and looked pretty good to buy. You don't see that right now, but that doesn't mean that the market's necessarily going to roll over and die. It can take some time to develop. The other thing to consider is that we're in a weird environment. And I do think that you're going to see, I mean, you go on TV and everybody's saying, oh, Greece can never pay back their debt, and Europe doesn't have enough money. We pointed out that yesterday, and the market came off when there seemed to be a realization that Europe doesn't have enough money to deal with it. But the way I see it, what they're all going to do, all these government officials, they're just going to monetize debt, and they're just going to print their way out of it. And if that happens, as Dr. K said, that could drive stocks higher.
Yeah, this reminds me a little bit. It's a shadow of what we had in March, April, May, June of 2009, where we had quantitative easing kicking in full measure from the U.S. Federal Reserve, and we had junk stocks leading the rally. The leaders faded out, but the junk is what led, and that's what's going on now. The best performing stocks since the market found its low have been junk. So that could be a signal that the European quantitative easing is alive and well, and that could continue this rally, even though it might not be a powerful one. It could still be a viable rally.
Yeah. Well, we actually have somebody here who says they know Elaine Garza rally well. I think that's kind of neat. Hope she's still doing well. Just kind of going through the questions now. I'm looking to, would it be too forward to ask for criteria to use for a pocket pivot scan? You know what you should do? Go get high growth stock investor software. They have a nice pocket pivot scan. So ours are proprietary. We'll sell them to you for what? Want to go for $1.5 million? How about yours, Dr. K?
Yeah, take the bidding. Let's start the bidding at $1.5 million.
Yeah, but really all you're looking for is the high, volume that's the highest volume over the last 10 days, and it's also versus down days. So AutoZone looks to me like it's trying to track in tight here. AutoZone is one of those, it's the ever-ready rabbit stock. This thing just never wants to blow apart, and it starts to look like it's going to, and it finds its feet and it comes back up. It looks okay. It's had a long run, though. Anybody who has questions about our money management services, please just email us. But we don't deal with the retail investing public, so just so you know. Too many headaches. Would you consider today's action in the market as constructive? Yes. It looks like it wants to push higher, so. Uh-oh. Some of you, some other people here are along LinkedIn. I hope that's a good thing. Maybe there's too many of us. Is Jazz shortable here? No, I don't think so. I don't think anything's shortable. I think you got to watch out because the market isn't going down. Whoops. 2 Z's on that one. Sorry about that. But, it's finally breaking down. I don't think you can short it here, and it's just going to blow to pieces. It might, but if it's topping, it's going to need some more time. This seems like a late-stage base failure, so yeah, I guess if you could have caught it at the 50-day earlier, maybe it was shortable, but it might need more time. Also, the market's not with you. The market's not on your side right now if you're trying to short. Wild hairdo. Who is the wild hairdo? Are you guys making fun of Kevin again? God, everybody does that. I just want you to know he is a 70s porno star. And he just waves his hand, and women stick to his hand. So, even a broken clock is right twice a day. That's true. Amazon goes positive today. Looks strong. It does actually look strong, and it's just, this is what'll confound you. We tried shorting into this, get stuffed out, and right away it should have failed here and rolled over if it was going to do that. But now you go to new highs, and you pull in. And look at this. You get a nice long tail today. So, that's kind of constructive on this V. It could go sideways until earnings come out. But, they've been buying the stock, and they're not selling it, just like Apple. So, looks constructive, but I don't think I'd necessarily be buying into this pattern, especially going into earnings. Avago is not a name that I'm not really interested, or not a name I'm interested in. It's kind of a laggard, smaller name. Semiconductor. So, I think it's more a question of what the SOX does. Whoops, wrong interval. Yeah, that's true. Let's go here. That's kind of where that's coming. It's trying to form a bottom. So, but this is acting constructively also, and it may be confirming a move in the market. So, thoughts on IBM? My thoughts are I have no thoughts, and it's just a big volume gap down from a big. You might even call this a punch bowl of death sort of pattern here. You have a big. Let's see, you have a big run. Look at that. You have a big run in the stock, and then look at this big, sloppy pattern. And that's a classic late-stage topping sort of situation with big, wide, loose ranges in here. Look at that. Makes a big up. That actually I would call a late-stage pod-type formation, not one of those big, bizarre pods that you see, punch bowls of death that you see in hot stocks that go up and down and then blow up. But the type that would form in one of these bigger cap leaders. So that looks pretty ugly. I'd keep an eye on this, but it would have to break down below the 50-day before I would consider it a late-stage failure. But it is a pattern that if you were paying attention to the weekly, you can definitely see how the character of the chart changes. The base in here is just wide and loose. There's not a lot of tight closes versus these areas in here, back here November, December, back here February through April roughly, and then during late spring, early summer here. And so this is pretty tight. Now look how loose this gets and tries to break out and it fails. Good example of an improper base, and that you could have recognized that going into that. Do you guys still keep, well, we keep trading diaries, just make notes about what we're thinking. So, UA, this needs to spend more time basing, it looks like to me. Don't, so somebody says LinkedIn moving. Is it? Where is it? Do I have it up here? It is moving. Huh. That's because you guys probably are buying it. Oh, heck. Go Gil, how about a coloring book? Yeah, we should do a coloring book. That'd probably be right up my alley, actually.
Chart pop-up book.
What's that?
Let's do a chart pop-up book.
Chart pop-up book. There you go. Coloring book. That would be good. You can either do that or just draw lots of different colored moving averages on your charts the way I do. Dollar Tree just continues to go higher. Don't have anything to say about it. We are not really interested in silver and gold right now. We're just kind of waiting to see what happens. Let me get to a daily chart here. Where's my chart? Here we go. It's hard to keep these straight sometimes. But silver, maybe it's forming a bottom. You know, maybe, and this maybe is something to watch. We need to see a viable buy point come in. But you know, if you're a high risk kind of person and you want to try this here, this might be a bottom. And see what you're seeing here. We got the market turning. The volume is picking up, I think. I have to check that in a little bit. But you got the market turning, and you've got silver now pulling up. Gold is doing a similar type of thing here. So in real time, on a relative basis, silver actually acting better here today. I think this may tell you that what's going on here is these guys, like we're saying, they're going to print. They got to print money. They got to print euros. They're going to print dollars, whatever they need to print, because it's the only way out of this. And so eventually gold and silver have to find their feet. So if you think this is worth a try, you could come in and probably buy some silver here and give it a whack. Maybe it works. I don't know. But they may be bottoming. But we don't see any buy points. Dr. K, you have anything to add on that?
Well, like I said before, you know, the long-term trend of the precious metals is up. This trend started a decade ago. As long as central banks continue to print money, the long-term trend should be intact, but in the meantime, these, you know, the SLV and GLD are entitled to base, especially after the big run-ups they had earlier this year.
Yeah, so, you know, maybe there is a trade here if you think this is bottom. The Japanese would call this a frying pan with a handle. For the Japanese candlestick traders, that back in the old days when they first came up with candlesticks for the purpose of trading rice, a bottom like this, they would be considered viable in commodities as a frying pan with a handle. That's what they would call it. They didn't call it a cup with a handle. So, some other names. People asking about Google. I'm not really a fan of Google here. I'm not really a viable gap up. What do you look at here, Dr. K?
It's not my favorite pattern. I mean, it's pretty broken down. I mean, you have a gap up, gap down. It's very loose, and
Yeah.
you don't really want to be involved in this kind of a gap up pattern. You'd want to see better, more constructive price volume action leading up to the gap up.
Yeah. MCP, somebody asking about that. Is it done? I don't know. It could just be building a base. You know, I shorted this thing actually as a gap down through here and made some quick money on that, but it hasn't gone any further. But I don't know. Maybe it's going to set up. So I think unless you see the market roll over, right now the market is looking too constructive for me to want to try and short it. So unless this thing is going to roll over here and we close in the red or we see heavy volume and it starts to back down, I think it's going to try and go higher, and on the premise of the fact that there's going to be more QE in one form or another, and that's kind of what I started out talking about when we started today's webinar. Dr. K, what is a book by Bernard Baruch that people should read?
I believe there's one of his books is in my top 50, so go to my top 50, Dr. K's top 50 reading list, and read that one. I don't remember the title offhand, but it was a good book, good enough for me to put it in my top 50.
Right. Somebody says, stay away from loose patterns and loose women. I think for women I'd say stay away from loose men, but loose men, that pretty much refers to all men, probably. Price smart. Well, it's a nice little, you know, V-shaped cup candle type thing. I don't see any pocket pivots or anything to buy here. But it looks okay. Thorn. Any other questions? It looks like we pretty much covered it, so you kind of get an idea of what we're looking at. You know, you have had opportunities to take profits in stocks like Green Mountain, even Fossil, but you know that's still a little weak here, and that could roll over. So keep an eye on that thing today. So what now? Is everybody running out and buying LinkedIn? Look where I started. SPRD. last question. I think we're running up close to 10 o'clock. Is SPRD a pod? No. Well, wait a minute. Let me look at this again. Well, not really. Let me just quickly give you guys a scoop on a pod. I guess kind of, but I don't know if I'd short it. But a pod occurs in a stock that is very hot. And some of the ones I like to, this is always a good example. Let's go back. Hot stock. It has a big move. Straight down and straight back up, and it's very V-shaped. You can see this, and then it breaks down. And a lot of this is because everybody who's missed this part wants to come in and catch it, catch the next move. And then once it starts moving again, greed takes over, and everybody has to rush into it. And you get this very sharp move up the right side, usually, and then they break apart. That's usually in smaller stocks it works that way, or something that's been really hot. Dry ships was one way back then. In 2008, 2007, 2008, that was kind of a big pod, sharp break, and then you have this run up the side. That's more like a pod, and then it breaks down. But SPRD a pod, yeah, it could be potentially. It has a little bit of that look. But what would you look at this as necessarily a pod, or it could be a late stage base fair. So you'd have to wait for it to start to break down in here on the right side before you try to short it. So. Anyways, I think that pretty much covers it. But like we're saying, take your profits if you want to on your shorts. If you're not covered out or stopped out rather, and you're forced to cover, you could hang out. But I think you get your profits, take some of them, and then hang loose and see where this market goes, because potentially it looks like the long side could start to develop. And I'm finding a couple of things to trade using my bag of tricks, and I couldn't find anything a few days ago or even a couple of weeks ago. Excuse me. All right, Costco. Somebody asked about Costco. Yeah, it's acting okay. It's trying to base. That's about it. Not really a dynamic stock. Any comments on Costco, Dr. K, to close up?
Wait for the basing pattern to finish. It looks like it could have a constructive pocket pivot in the days ahead, but just wait and watch for it.
Yeah. Oh, wait. One more. Q-Core. Dr. K, this is one that you have loved many times. Unrequited love, I might add, but you've loved it nevertheless.
In this kind of market environment, and there are not too many stocks on the long side that give,
yes.
Requited love.
By the way, newsflash, Dr. K and Julio Iglesias are going to get together to do a piano vocal version of a variation of All the Women I've Loved, and it's going to be called Of All the Stocks I've Loved. But what's your take on this one? You like it?
I'm down for that. Q-Core.
Yeah, it's breaking out.
Got a powerful pattern in this very weak market environment that's characterized August and September. It has two gap ups in the pattern, the basing pattern. It also has a big, nasty down day there of 6 million shares traded. So, again, I'm not rushing to buy this thing. It had a pocket pivot on October 6th, but I wasn't interested, and certainly the market was weaker then. But I would wait for this to issue another pocket pivot, and then maybe you take a shot at it, because certainly on the fundamental side, it's very strong.
Yeah, probably one of the few things to buy in this market.
And I know we've been talking about all these stocks to buy. I don't want people to think that we are just automatically fully bullish here. We're just testing the waters, because the MDM is on a cash signal, and while it doesn't take much for it to go to a buy signal, it doesn't take much for it to go to a sell signal either. If we get another distribution day or another 2 distribution days, and followed by poor action of the leading stocks, then that would be enough for the model to switch into a sell.
Very good. All right, everybody. Thanks for showing up. Went a little longer than we thought. So stay tuned to see what happens. We'll probably put out some short sale setup emails out in a little bit, talking about what's going on in the market with respect to the short side. But you'll notice Green Mountain is not really pushing too hard off of this low. It's trying to, but I think the market continues going. It'll try and rally here. So I think you should probably take your profits here and not be a pig. So, all right, everybody. Thanks for coming, and we'll catch you next time. Take care.
So long, everyone.